My name is Maludi Grasha, NX Unite team member at Nexus Marketing and your moderator for today's session. Today's panel is Staying Accountable, Nonprofit Financial Best Practices. And as usual, before introducing the panelists and we jump into the topic, I do have some quick logistics to cover. NX Unite by Nexus Marketing serves as a powerful community resource designed to foster connections and facilitate lasting relationships within the mission-driven sector. On NX Unite, you can find upcoming industry events, suggested influencers to follow, trusted solutions, and cost-driven podcasts. NX Unite also hosts webinars, demos, and of course, panels with experts such as these lovely folks in here today. Today's 45-minute long panel will include time both for questions curated by my team and questions from you all, our fantastic audience. So at any time during the panel, please feel free to drop your questions in the chat, or you can drop them in the Q&A tab, and we'll spend the second portion of the panel addressing as many as we possibly can. Finally, before I introduce today's panelists, I want to thank you all for attending this session. Whether you're attending live or watching the recording, we're very excited to be in touch with you, the mission-driven community. So thank you for taking the time to be with us today to learn from these outstanding experts who I'll now finally introduce. I'd like to first introduce Chris Carey, who is the portfolio manager at Carnegie Investment Council. They help nonprofits achieve goals by providing strategic financial advice and creating portfolios that align with their mission so they can focus on making a bigger impact. Chris, thanks for joining us.
For having me. It's a pleasure. It's my first time as a panelist, and it's great to see a lot of Ohio representation in the chat, which is where I currently reside. So thank you very much for having me.
Wonderful. Also with us today is Joe Pareto, who is the Vice President of Sales and Marketing at First Nonprofit Group. Joe works directly with program partners, insurance brokers, members, and prospective members nationwide. He also maintains property, casualty, and surety insurance licenses and utilizes his experience in insurance industry to introduce the value of risk transfer alternatives. Joe, thanks for being here.
I appreciate it. Echoing what Chris said, looking forward to participating on the panel, and also my first touch with the group. So appreciate the opportunity.
Thank you. Also with us today is Karen Houghton, who is the CEO of Infinite Giving and a nonprofit investment advisor. She leverages her deep nonprofit expertise to bring modern cash management to nonprofit organizations. Karen advocates for organizational sustainability through better financial management, strategic access to curated investment practices, and increased stock, crypto, and DAF giving. Karen, thanks for being here.
Thanks so much. Glad to be here.
And finally with us is Lynn Mason, who is the accounting implementation specialist at Atlas Software. She's a nonprofit software guru who's been demystifying financial tools since before smartphones ruled the world. Lynn, great to have you join us.
Hello, and I saw someone say they were from San Juan Island, which I'm looking forward to visit. We have a good friend who lives there, and we're heading there as soon as it gets a little warmer.
All right, well, it's now finally time to hear from our panelists. And Chris, I'll have you start us off with the first question. What are the key financial challenges nonprofits face today, and how can they be effectively addressed?
Sure. I think from what I see from my viewpoint in terms of how we work with nonprofits, one is this kind of all too common is a lack of reserves, and more so a knowledge of making sure that an entity is able to weather many potential storms that might come their way, and being able to have a significant backstop, just like we do, you know, in our own portfolios for when we get to retirement, we make sure that we're you know, sufficiently armed to make sure that we can weather most storms. That's something that I see pretty frequently. And sometimes it's just the case of not having the knowledge of a way to be able to proactively approach that, so that you can have a roadmap to being able to build those up over time to really help secure, you know, the destiny of the nonprofit for the years and decades to come. And I'd say the other thing that I see, at least from my lens, is a competition for funding. There are countless numbers of nonprofits, and the number grows by the day. Fortunately, we live in a very, very philanthropic society compared to other countries, but there is immense competition for funding, for grant writing, so on and so forth. So anything that nonprofits can do to sort of open up that door to accepting non-cash giving, so on and so forth, really sort of broaden that scope, open up that funnel, is definitely a way that you can effectively address that. Thank you for the question.
The first question. Joe, over to you. What are your thoughts on this?
On the insurance side, the majority of really the main issue we get is related to staffing. You know, how to do more with less, and specifically, there's competition of wages, which the majority of our nonprofit organizations, they're not going to win that battle. So how do you be creative with recruiting new talent, and probably more important, maintaining a hold on your existing talent? And, you know, in that case, it's just providing tools. How do you make the job easier? How do you make it more efficient? You know, finding, you know, educational resources and vendors that provide those tools that make you more efficient, and, you know, allow your employee to concentrate on the core mission aspect of it, right? Appreciation, you know, being able to, you know, through employee reviews, those days are just kind of things, being able to quantify that, hey, listen, this is the impact of what you do on a day-to-day basis, and this is how it helps us do ours. You know, those direct kind of like, here's how you work and here's the result of it, is such a big part of it. And I think probably final, opportunities for growth, movement within. I think those are all ways that we've had discussions with our clients as far as how they've been able to address that main staffing side. And, you know, the big thing again is how do you maintain your existing your existing employees, because it's so hard to train, right? You know, as soon as somebody walks out the door, you go through the process now of hiring somebody. You know, how do you get them back up to speed to the individual that left? So that's what has just been a common response that we've had over the last couple of years.
Karen, you're up next. What are your thoughts on this?
Yeah, I mean, anyone on this call, right? And everybody who's tuning in, it's when you're in the nonprofit world, you're here because you deeply care. And you're probably wearing many, many hats. And then as a financial leader, your job is to build financial sustainability. So the question is often, you know, at a really high level, it's like, how do we steward what we have? How do we grow what we have? How do we bring in more? Because all of those financial cornerstones are impacting the kind of work and the scope of work that you can do to impact, you know, the greater community. So everyone here kind of knows all these different pain points. You guys have touched on a lot of them. It's like you have rising operating costs. I was reading the other day that 46% of nonprofits report increasing operating costs, which is then, of course, going to impact their financial stability. It's, hey, there's limited financial resources, which we talked about. You know, how are we finding those? The competition for funds and grant funding and all of that. And you're looking at economic instability, which I'm not a sky is falling person, but it's also the reality, right? Where we're always looking at changing markets. And so how do we as leaders make sure that we're stewarding the funds that we have well, and how do we grow it the best we can? And I think when you look at addressing some of those challenges, a big piece of that, especially entering into 2025, is really strengthening your financial reserves. And some people on this call may be like, that's great. We're in a scarcity mindset. I don't even know how to get my 90 days of reserve funds. Others may be like, hey, we have them, we're fine. But then when you really look at financials, I often encourage doing just a high level audit. Where are the funds you have sitting? Could they be somewhere different? Because the easiest way to kind of create financial stability is stewarding what you have well. So really looking at, do you need those 8 different bank accounts? Could you be in maybe one that gives you FDIC sweep coverage? Could you look at a yield rate here versus here? And then, hey, guess what? Another year at a 1.5% higher yields in a low risk holding in this environment is still meaningful. That could be the equivalent of a large donor. So a lot of it is just taking that high level and looking at, hey, we know these challenges we're facing. Let's start with the lowest hanging fruit and doing like, where are funds sitting and could they be somewhere different that helps us really create efficiencies and then grow that cash.
Karen. All right, Lynn, what would you add? And can you share how audit records and compliance can help nonprofits avoid common key financial challenges?
It's like the perfect answer to lead into all of the things they said, because if you don't have the right software that lets you see all of the things they talked about, you can't show where you are. You have to have a software that lets you actually track those expenses, that lets you see what your money is doing. And that's the pain point that we see as an implementation specialist in an accounting software. I see the challenges of people coming in from accounting software that is not designed for nonprofits. You're trying to force another software to give you fund accounting and you can't track it. And so it's trying to show your restricted funds. We have all of these unpredictable funding streams, increased operational costs, and donor restricted funds. And so having that live fund accounting with clear customizable reports so that you can actually get clear reports so that you can have transparency with your stakeholders, so that you can actually see the cost of raising a dollar, so that you can have that, what is my balance between my program costs and my admin costs? How much am I spending on my employees? How much can I put aside in my reserves? Oh, we actually did have enough money. I can move that money to my savings. It's huge, absolutely huge, to be able to have those reports that you can actually read. It's amazing. And so that's what you need. That's the biggest challenge, is being able to get reports that your stakeholders can understand so that they trust you. Because once they trust you, you get money.
It's amazing. We talk to folks and we still have people who are using like Excel to kind of track expenses. And we get it. Everybody starts somewhere, right? And they're drowning in it, right? And it's like, hey, we don't know how to take this and communicate it to other people. We don't know how, to better kind of implement these. So they have full of good intentions, but I think it's the idea that it's really overwhelming to switch over. And ideally, whatever software you're providing, whether you're going all in or somebody else, just knowing, hey, they have teams of people who can help you implement it. And if you can get through the pain points to the other side, that's where you're really going to find increased transparency and accountability too.
We had a client the other day who was, they're having to provide a bunch of documentation to a bank. And they were just like, we had to pull reports for our bank. And the bank loan officer asked me what software we used because he said it was the first report they understood in months. I was laughing.
Yeah.
Thanks for sharing.
We face a lot of that. Yes. Sorry, I keep jumping in. I always like conversation. So thanks, Malou. We face that a lot when you look at brokerage accounts, right? It's either they have the one like E-Trade or Schwab account that they haven't touched in however many years because somebody way back opened it, or they know they probably could have a brokerage account, but they're like, it's so painful, right? The average nonprofit brokerage account takes roughly 10 to 12 weeks to open. And there's a lot of pain points. It's wet ink, it's snail mail, it's this whole process. And so that's where even with Infinite Giving, when you look at different softwares, we're not accounting, right? We're more on that cash management and treasury and asset giving side where we're financial solutions there. But we do things like, hey, guess what? We can open a brokerage account for you within 30 minutes of your time and 3 business days on our end. So I think whatever kind of technology solutions you're looking for, the beauty is that ideally they can make it easier and it's as frictionless as possible to kind of then pull over and be like, hey, this was on my to-do list. And 10 years ago, 5 years ago, even, there was no efficient way to do it. And it was too overwhelming. These days, there's a lot of solutions out there that can be really straightforward and simplify your life without all jumping through all the hoops.
And cheaper.
Yes. It's like it's the chicken and the egg, right? It's kind of like, well, do we spend to make our life easier? No nonprofit wants to spend, right? That's a horrible feeling. You want to steward your funds well, but if you can spend and put in a little bit of that time and investment up front, long term, it gives you a lot of breathing room and really best practices and a lot of strategic partners that can help you do your work better.
Thanks, everyone. All right, wonderful start to this conversation. Karen, I'll stick with you for the next question. How can nonprofits leverage technology to enhance financial management and operational efficiency?
I mean, we were kind of touching on it already, Malou. I probably jumped ahead. I got excited, but it's really streamlining and automating as many operations as you can. Things like, hey, we should have a brokerage account, but we don't. 90% of nonprofits don't have a brokerage account. Okay, well, why is that important? Well, it's important because it can help you receive stock gifts. Okay, well, maybe no one's ever asked you to do a stock gift, or you're like, great, I have a brokerage account that somebody set up 10 years ago. We receive like 1 a year. Then you start to kind of work backwards and be like, well, what if, right? The average stock gift is $8,000 here in the US. The average online cash gift is $128. So if you just take yourself out of the game and you're like, that's too much of a pain point, I don't even want to start to ask about asset gifts. Okay, well, then you're taking yourself out of those larger, higher capacity gifts and donors because of all the tax efficiencies. So I think there's ways where you can really look at what are the systems we have or what opportunities are we missing? And then how can technology now come into play in the most cohesive way possible? I know Lynn and I were talking right before the panel started, and we were talking about how, like, she had a client who had 8 different bank accounts. We've actually had like kind of the most of our clients, they had 11. And it's, hey, we want to diversify so that we don't go over the 250K FDIC coverage per entity per bank, which is best practices, right? Or it's like, well, we needed this bank for this purpose and this bank for this purpose. And then you look at all of the accounting and the operational inefficiencies that causes. With somebody like Infinite Giving or having a brokerage account, you now can have access to FDIC sweep programs, which with one account provides coverage on cash up to $5 million. That allows you to keep your preferred bank account, one brokerage account, and then you can go. Or you can start to create multiple accounts. Like within us, we have operational reserves, endowments, growth accounts, grants, you name them all. They have different allocations. When you need it, you click transfer. It's in your linked bank account via ACH within 1 to 2 business days. So just saying that I would focus on operational efficiencies and then stewarding what you have as wisely as possible. And that includes our time. And that's where technology can be really helpful.
Over to you, thoughts on how to leverage tech.
Sorry, missed the name because you were still muted.
Oh, it's
one word. Was it me?
Oh, no. Sorry. It must be my audio. It's for Joe. Sorry, Joe.
Okay.
There you go. Leverage
No
tech.
problem. I'm struggling at lip reading this morning, so we got it. I think, obviously we've all kind of touched on technology in different ways. Just in my sector, technology has a direct impact on insurance premiums. So you're talking about controlling costs. There are a lot of times where the ROI and the investment in technology is going to be a direct return in lower insurance premiums. For example, cyber. There's a lot of cyber tools out there now that are available for nonprofit organizations specifically that are going to lower cyber premiums, right? As more expansive this world gets, as more frequent as we're seeing cyber attacks, those kind of things, ransomware, that type of stuff, that's an easy solution. And that's a pretty simple ROI product right there. One of our other lines too, on our state unemployment, we require certain technology requirements of our third-party administrators because they're interfacing with the states on behalf of the client. In that case, that technology investment for that not only improves or minimizes the workload of the employee at the organization because it's a faster exchange of data. It's more secure. And in this case, by using a more technology savvy vendor, you're going to get faster credits. You're going to get determinations faster. There's going to get more time to be able to prepare cases and respond, right? So I think one of the things with technology is you always look, does it make us faster, right? Are we more efficient? Is there less work involved in the process? And two, from a performance standpoint, whatever our goal may be, the majority of the time it's making sure we're more compliant or we're reducing costs. So just for us, those would be the two easiest ones I'd say in my world.
Can everyone hear me?
We hear you now.
Okay. All right, Lynn, any tips in using tech, especially in strengthening internal controls and policies to avoid financial mismanagement?
So making sure that you are using your technology wisely. So the cloud-based solutions are the way of the future. Everything's moving to cloud-based, and that really makes sure that you aren't having to rely on your backups. You're not having to rely on version control. So that's one of our big things. And then having those cloud-based solutions allows you to integrate all of your functions. Donor management, fund accounting, reporting, automation, everything will come in. And then, sorry, missed part of what you said because it was still cutting out. Try one more time.
Oh, can you hear me? Can you hear
Yes.
me now? Okay. Any tips in using technology, especially in strengthening internal controls and policies to avoid financial mismanagement?
Yeah. So with your technology for internal controls, yes, and wisely. So one of the great things about having technology for internal controls is that you can use things like your bill pay services where you can have approvals. You can have your user control levels. You can have report managers where people only have access to certain things. You can make sure that your integrations, bank integration is there so that you can bring in things. Oh my gosh, it's so complex. And now my brain is jumping in all over the place. Automation, saving yourself time. Let's focus on one of the areas, using technology wisely, setting up automations for yourself, because there's a billion things I could talk about and I'm only supposed to talk for 2 minutes about it. So using technology to automate the basic things so that you don't have as many places where you can mess up. Setting up recurring transactions, giving your donors the ability to set up recurring donations, recurring AP, recurring register transactions, recurring automatic emails to thank your donors, setting up smart lists so that you can pull lists of people based on the donor that, when did they donate, to which purpose, at what time. Our partner Keela has ways to manage your donation and donation drives to help you automatically pull in and evaluate how much money came in from here, how much should we spend, do it, which of our drives came in, so that you aren't having to run all those analysis yourself. So you're going to utilize as much of the automation as possible so that you're not spending your time doing all of those little manual tasks.
Wonderful. Thanks, Lynn. All right, Chris, what would you add here?
Yeah, not much to add, being the final person, but I'll give it my best shot. I mean, really, with technology, especially the advent of AI, I don't think it's going to be replacing functions, but it is going to make it a lot easier to make tasks, significantly scalable. A lot of products that are available to you are typically already included within your Microsoft Office suite, so on and so forth. It's just a case of learning how to use them. Truly, though, as well, from my side of the business, which is that sort of investment management, putting your cash to work, investing, so on and so forth. It's really that there is, as Karen mentioned, no need for 11 bank accounts, which blows my mind. You're able to consolidate something, everything in one place and really have that single source of truth, so that you're not having to reconcile 5 different systems. You can go in and you can see, where's my cash management, where are my treasury reserves at? How's my endowment doing? What about my grant pot, so on and so forth. And then, also within that, all of the accounting data is all in one place. Stock donation receipts are all in one place, to keep records for your donors, all this sort of thing. There are so many platforms that are out there that are able to consolidate it, for you. It's not just Karen's, it's not just mine. There's hundreds out there. But more importantly is that they're getting cheaper and cheaper every day. So there's less of a roadblock or a big budgetary commitment to be able to really take hold. And at the end of the day, we're all trying to save time. We all wear a million hats. So anything that we can do, I think is fantastic. But yeah, all the other panelists pretty much hit on every point.
I love that. Thanks, Chris. All right, here's our next question. And Joe, I'll have you start us off with this one. What strategies can organizations implement to diversify their funding sources and ensure long-term sustainability? Oh, you're on mute.
Sustainability, just kind of listen to Lynn, Karen, and Chris on the financial side. I think they all kind of touched upon really the 2 things is transparency. Having compartmentalized systems that don't talk between departments that's going to be a struggle. That's just something, and really in the world now that shouldn't be an issue for us anymore. There's cost effective platforms out there to eliminate that. And I think the second thing is really the reserve side. And listen, I know reserve is a matter of personal opinion for each organization, but it's so important. Control what you can control, and we're never going to be able to control the funding cycles, whether it's the federal level, the state level, the county level. There's always surprises. And long-term sustainability is about being able to be flexible, and I think that part of it is so important. The reserving aspect is so important. That's not something just to the for-profit world. It has to be something that we make just a regular part of the budget cycle, and make it a regular goal, because things are going to happen. And having a greater responsibility to the population served, it's just vital. Any way that you can figure out to do it. And a lot of that is having somebody come in and take a peek and maybe helping with you. That, a fund vendor that not just understands that, but actually understands your business as well. That's such an important piece.
Thanks, Joe. All right, Chris, thoughts on diversification and sustainability?
Sure. A key stat that I'm always reminded of is that 90+% of wealth in the United States is not kept in cash. So if nonprofits aren't doing anything to open up the door to that 90%, you're missing out on a significant portion of potential revenues. And so that's why it's important to work with a partner who is able to open up the door to stock donations or to cryptocurrency. That we published something called 11 Ways to Give Guide, and I won't bore you with all of them, but there are so many ways, and most of them are quite novel, in which nonprofits are able to fundraise and bring additional dollars into their organization. And it's so important as well because people are getting a lot smarter, and by that I mean donors, consumers, about how to make the most tax advantaged donation to the organizations that they care about. And so I think it's important not only to have a, to be aware of this, but also then to have the solution available so that you can tap in and be able to access those. We also live in a society where people, and I mean this in the loveliest way, are lazier and lazier, and they want the most frictionless solution to the problem they're trying to solve. Okay, there are a million things competing for our attention. So if you're not able to use technology that can grab the donor where they're at that moment, it might fall by the wayside. And so, for instance, being able to click donate and, scan my face to Apple Pay a donation versus having to fill out 15 fields, that's a time saver, and a lot of people skip over it. And the same thing applies to DAFs, it applies to crypto, it applies to stocks. It's all about being able to capture them and have the donor essentially exert as little effort as possible. And again, as I mentioned in my previous answer, there are so many solutions out there, and it's getting infinitely cheaper by the day. There really is no excuse not to go out and find these solutions and start implementing them. Yes, it requires some effort, but it will pay off massively.
Thanks, Chris. Karen, over to you. What would you like to add?
Yeah, Joe, I'm going to jump on a couple of things. Joe mentioned reserves, and to get in the weeds really quick, there are kind of standards for nonprofit financial health. So pre-COVID, you would hear 3 to 6 months of operational reserve on hand. Post-COVID, it's 6 to 12 months of operational reserves on hand. That is not like a hard and fast rule, but it is kind of a best practices rule. So something to consider. Sometimes people are like, but what does that mean, right? And it's the idea of a savings account. So just like what Chris and Joe were saying, if you're building financial sustainability in the nonprofit world, it can feel uncomfortable to be like, wait, but you just want me to hoard money over here, right? But we have to take that mindset away. It's okay to think that way. We want to be cautious. We want to be good stewards. But the reality is, when Chris mentioned 90% of wealth in the US is not in cash, there's a reason for that, right? And so that financial strategy is something that works. So why do nonprofits often take themselves out of that? And a lot of it is about fear, right? So we want to take emotions as much as we can. It's always involved in money, but as much as we can, kind of set emotion aside and look at data, look at practicality, look at liquidity, and all of these different kind of aspects. There are a lot of things that you can do with cash reserves that are very low risk. They can still get you a nice yield. So we're not talking about going and doing crazy things in the market, right? But just ask yourself, hey, is there potentially better ways to come alongside? And do we have enough reserves? So just like ideally we do for our families, where, if you lost a job, how do we pay a mortgage? What are we comfortable with to work towards having a nice savings account? The same thing you should be doing for a nonprofit. Now, for us, we say 6 to 12 months. So when nonprofits get more than 12 months, we also say, great, how are we thinking about these funds now, right? Do we want to seed an endowment? Is that another longer term project? Do we want to create a separate fund? So that's almost the beauty of sustainability and having a really clear plan, is that you can say, great, we've met this metric. We're growing, we're stewarding what we have wisely. How do we start thinking about the future? And I think the final note in that is clearly all of us are a little bit biased on here, but it's finding strategic partners, right? Like, we work with incredibly intelligent boards, very savvy teams, nonprofit leadership. You guys are wearing so many hats. You're doing so many different things. So having one extra partner who can say, yes, that is a good idea. Or, hey, you're so busy here. Have you thought about this? Hey, let us take this off your plate and we can do this for you. That just helps you increase the quality of your work and then the time that you have to do the work you have well.
Thanks, Karen. All right, Lynn, we want to hear from you as well. What would you like to add here?
I think most of the stuff was covered on like making sure you've got money coming in from different sources. And you've got to get your individual donations, your corporate donations, your grants, your revenue streams that are coming in from fundraising. But a big thing that gets lost is a lot of people are only tracking the money in and not paying attention to how much did it actually cost you to get that money in. And so you really need to make sure you're tracking the cost of raising a dollar. Yes, it's an investment to figure out how you got that money in. It's going to cost you time and resources to go gather that money. So you need to find a way to track that expense against the actual income. So many people, when they are tracking those, track them as completely separate things. If you paid someone 40 hours of salary in order to go do the research to bring in money that didn't cover their 40 hours of salary, you didn't make any money. So you have to make sure you're actually tying those two things together. So you have to really find a solution that lets you tie that income to the expense. And whether you're doing something in Aplos like our tags, or keeping it all in the same fund, or whatever accounting software you're using, you have to tie your income and expenses together and make sure you're tracking that cost of raising a dollar for your reporting, so that you know if that money gathering strategy is functional, and do that extra step of analysis for your long-term sustainability. Evaluate which campaigns are actually working, and make sure you've got that diversity of funding sources, so that if one of them runs dry and isn't going to work anymore, you've got something else where your money's coming in. That's really the only piece to add there.
Love that point. Thanks for sharing, Lynn. All right, this is the last of my questions before opening it up to our wonderful audience. So if you have questions for our panelists, please drop them in the chat or in the questions tab so we can address the topics that are relevant to you and your team. All right, Lynn, here's our next question. How important is it for nonprofits to have a comprehensive investment policy, and what should it include?
You give me the one that's the least directed at my
I'll take it.
Yes, Chris.
Sure.
Well, I can give one as a personal thing. Your comprehensive investment
Go for it, Lynn.
is important because you have to make sure that you're balanced, because if you don't have a good investment policy as a nonprofit, it's just like any other person. You have to think of your nonprofit the same way you would your retirement plan. Even you're a nonprofit, that doesn't mean you have to spend all your money. You have to look at long-term sustainability for your nonprofit. Just like, that's what I tell them coming in. I plan on living off this money when I retire 20 years from now. I'm not looking at spending it right now. So my comprehensive investment policy has to be making money after I'm not running my nonprofit anymore. Go, Chris.
Sure.
Thanks, Lynn. Yes, Chris.
So how important is it, if you are fortunate enough to be in a position where you have reserves, where you have an endowment, or just a board designated investment account? It's not a question about how important it is mandatory. You cannot operate without an investment policy statement. And the investment policy statement is so important because it's really that cornerstone of, you know, your relationship with your investment advisor, with your board, with all key stakeholders. You know, you are sitting as typically, especially if you're a board member, you're a fiduciary. You have a fiduciary responsibility. And it's so important that everyone is singing from the same hymn sheet and they understand the rules of the road with regards to what are the purpose of these funds, how they're invested, so on and so forth. And it's actually a great introductory document for new staff members, new board members to get up to speed in terms of why does this account exist? What is it used for? And, you know, potentially how can we tap into it? And so there are you know, really key components to it. The first one really is going to be, you know, a statement of objectives. And, you know, this is on an account by account basis. What is the purpose of this account? Why are we investing it? And sometimes it's it's ranked objectives. You know, there might always be more than one purpose. And that could be, for instance, you know, we want to try our best to maintain principal and, you know, maintain purchasing power for the years and decades to come, really have it more of a, you know, endowment-esque style account. Or maybe it's term. It's you're putting money away for the next 5 to 10 years because you want to build an additional facility to expand your operations. And so having that, you know, that in there, that time horizon stated is so vitally important, especially in the endowment side as well, having a spending policy. So how are we going to calculate the amount of money that we will be withdrawing? What is that going to be? Are there extraordinary circumstances whereby we might want to withdraw more? How are we going to calculate that dollar amount? These are all very, very important things. In addition to that, particular constraints. So, we work with a lot of religious organizations. They don't want to be invested in companies or industries that, are associated with the sin stocks, if you will. Or if it's an environmental nonprofit that we work with, you don't really want them to be investing in chemical companies. You kind of, you can't be taking in money here and not have really your dollars not being aligned with your values, which to more and more people we work with, that's important to them. Some of them just want to be invested passively, and that's fine. Others really want to make sure that they're staying true in many ways to that. In addition to that, it has to cover your tolerance for risk. And then, okay, we're investing for the future. Well, how are we invested? What percentage is going to be in stocks? What's in fixed income? How much are we allocating towards cash? Stated guidelines for that, as well as tolerances and which is acceptable. In addition to that, how do we rebalance? What about our duties and responsibilities? And that's not only the duty of the investment manager or the strategic partner that you're working with, but also what is the responsibilities of the custodian that holds your funds, or the board members, or the financial or / investment committee. All very, very important. And then finally, performance monitoring. So how do we make sure that the people that we have hired to do this job for us are actually doing it and they're doing a good job? How often should we be reviewing our investment policy? And the best guideline really is, at least once a year, you should be reviewing your investment policy statement, or if there have been significant material changes to your organization. It sounds like a lot. It doesn't necessarily have to be a key document. And I know it can be, it can sound overwhelming. That's why you should, work with a strategic partner to help you set these things up. But once you put the effort in and you're off to the races, you have a robust, living, breathing document that can stand the test of time. And it really just is, that important level of due diligence that nonprofits need. And we see a lot as well that donors, and we're talking big donors that want to make large grants, they want to make sure that you have all these things in place. And you have to put up and show that you do. They're best practices. And again, with technology, it's easier than ever to do. It's a topic I'm very passionate about because I work with plenty of clients where their investment policy statement has been half a page and it's completely not fit for purpose and doesn't actually align with the objectives and the goals of the organization and what they're trying to do. So it's very important work. And yeah, it's easier than ever to do. And there's a lot of things that you should include in it.
Wonderful. Thank you so much, Chris. Unbelievably, time is going by so quickly, so we're going to have to wrap up this portion of the panel so we can stick to our schedule. If you have more questions for our panelists, please complete the survey that will be dropped in the chat to indicate which panelists you have questions for, and we'll make sure to connect you with them after the session. I'm going to go ahead and ask each panelist for a final word for our nonprofits. And if you can let our audience know where they can find you and your organization, Joe, I'll have you start us off with that.
It's really the topic of the financial management aspect of this, longevity, so on and so forth. It kind of touches a lot of different industries, mine being on the insurance side, which, again, it's about partnership with your organization, partnership with your insurance broker and their selected carriers. No matter what, numbers are numbers, but relationship drives results. It really does on our side. And a lot of that is being open to communication. And a lot of times people are afraid to ask questions for a lack of knowledge. If that's the way you feel about your relationship with your insurance agents, your carriers, then you're working with the wrong people. You have to find that comfort to where you are comfortable asking those questions and trusting them to at least give you proper information to make your own decision on. My group, First Nonprofit, we do various specialty risk insurance products for 501c3s and governmental entities. You can find me on LinkedIn. We're based out of Chicago. I'm actually in the Tampa area. If you have any questions, anything in regard, don't ever hesitate to reach out. If we don't happen to know the answer, pretty good at being able to contact you, somebody in this sector that will. But thanks for your time today. Appreciate it.
Thanks, Joe. Karen, over to you. Final word and where to find you.
Yeah, you can find us at infinitegiving.com. I dropped the link in chat, and just know that we're a financial partner. We exclusively serve nonprofits, so we can help you with cash management. We can help you with policy creation, endowment creation, and then also helping you receive cash, crypto, stocks, donor advised funds, all of that. So really just a financial partner who is under that fiduciary capability, who can help you receive donations and then manage those donations as needed. I saw Trina in there. We serve them and lots of other great organizations all over the US. So if we could be helpful, reach out.
Thanks, Karen. Lynn, over to you.
Sorry, I accidentally clicked on the wrong spot, so it took a minute to hit the mute button. It was like covered up. Go away. Thank you so much for inviting us to do this panel. It's been fun. You can find us at aplos.com, and Alex already dropped a link in the chat for me. And it was fun to see a bunch of Aplos people here. One of the people I actually did implementation for fee was here in the panel, so that was fun today. And I look forward to hopefully seeing more people. I love being able to help people find solutions that work. And we do lots of webinars and educational sessions for people in just general accounting. Even if you're not an Aplos person, we have lots of available webinars. So you're welcome to come and join our accounting webinars, no matter what software you're in. It's not just about that. I love doing the educational sessions. So I look forward to seeing some of you, whether you're Aplos customers or not.
Thank you, Lynn. All right, Chris, you have the final word.
Oh, thank you very much. So thank you for inviting me. This was my first panel. It was a tremendous time. Looking forward to potentially being invited back to do more in the future. In terms of where to find us, your team members very kindly dropped my LinkedIn. You can also find us at carnegieinvest.com. We have a dedicated nonprofit team at our firm that works with organizations. We're very sector agnostic. We work pretty much from coast to coast. We work with setting up, endowments, board designated investment accounts, cash management accounts, so on and so forth, creating investment policy statements, or might be the case that we are working with a client that has come from an advisor where they really have been overlooked and underserved and not really getting that dedicated focus that they require. We also have development consultants and staff that work completely free of charge with our with all of our clients. Again, we said there's 90% of household wealth is held outside of cash. They're the ones to help you, develop the resources to bring it in. So, we'd love to have a conversation with anybody that wants to learn more. And thank you for inviting me. This has been a really lovely way to spend, the afternoon. Cheers.
Thanks, Chris. All right. And with that, we have reached the end of our panel. I want to give a big thank you to all of our panelists for sharing their insights today. I also want to thank our audience. Thank you so much for your time, and I hope you enjoyed yourself and learned something that will benefit the work that you do on a daily basis. It has been a pleasure speaking with you all. Thank you once again, and have a nice rest of the day, everyone. Thank you, panelists.
Bye.